ever feel like stepping into the Forex market is like, walking into a high-stakes poker game. You got all these players, the cards, the chips, but you don't know the rules.
Yeah, definitely. It can feel like that.
Well, on today's deep dive, we're dealing you in.
Love it.
We're going to dive deep into target selection and profit objectives.
Right.
And to guide us, we have a trader who calls himself the Inner Circle Trader.
Okay, interesting.
He's got some pretty unique strategies for kind of reading the market's tells.
I like that. The market's tells.
Yeah. Turning those confusing candlestick charts, the ones that look like a secret code.
Right.
We're going to try to turn those into potential trading gold mines.
Ambitious. I like it.
So what I found really interesting about this trader is he doesn't just dive into individual trades. He wants to understand the whole, the underlying market sentiment.
Yeah, the big picture first.
Exactly. It's like he's saying, don't just play the cards you're dealt, understand the game before you even put down a bet.
It's like, yeah, reading the room, right?
Yeah.
Getting a sense of the overall mood.
Exactly. So how does he size up the market, before he makes his move?
So he starts by establishing what he calls a weekly bias.
Weekly bias, okay.
Which basically means he's trying to figure out, is the market leaning bullish or bearish for the week?
Okay, so is it going up or is it going down?
Exactly. He uses this analogy. It's like checking the weather forecast before you go sailing.
Okay.
You wouldn't, want to set sail straight into a hurricane.
No, definitely not. You'd want to be prepared. All right, so once he has a feel for, kind of the overall market direction, what's his next move? What's his secret weapon in this whole trading game?
Well, he relies a lot on this tool. It might sound a little intimidating at first, but it's called Fibonacci extensions.
Fibonacci, okay. I've heard of that.
No, don't worry. It's not like some mystical crystal ball or anything.
Right.
They're more like guideposts.
Yeah.
That help you kind of visualize where the price might reverse.
Okay, guideposts. I like that. Okay,
Yeah.
guideposts. I like that.
Yeah.
So instead of just relying on gut feeling, right.
Right.
He's got these guideposts to kind of point him in the right direction.
Exactly.
But why Fibonacci?
Yeah.
What is it about that sequence that...
Well, it's interesting, right? Because you see these Fibonacci sequences.
Mm-hmm.
They pop up everywhere in nature.
Oh, yeah.
Like seashells, sunflowers,
Really?
It's just kind of like this mathematical ratio that appears, and traders have observed this, that they kind of play out in market cycles as well.
Interesting.
So it's like almost like these underlying psychological tendencies in the way that people buy and sell that kind of reflect these ratios.
Fascinating. So it's like the market has its own hidden language.
Yeah.
And he's kind of figured out a way to decipher it.
Yeah, in a way. That's a good way to put it.
Yeah.
He uses these Fibonacci extensions to kind of see, okay, where are the potential price levels?
Okay.
Where the market might say, okay, this is it, we're changing direction now. But he takes it even a step further, looking for clusters or confluences of these Fibonacci levels.
So the more of these guideposts that line up,
exactly,
the stronger the signal.
Right, exactly.
Okay.
Imagine, it's kind of like if you think about a pressure valve.
Okay.
The more those Fibonacci levels all kind of come together.
Okay.
It's almost like the pressure for a price move, either up or down, just intensifies.
Like a pressure cooker.
Exactly.
Got it.
And that's where he starts to look for those really high probability trading opportunities.
That's fascinating. Okay, so let's say it's a bullish week, right?
Okay.
We're feeling good, things are looking up.
Right.
How does he actually use these Fibonacci extensions to pinpoint, potential trades?
So he starts by identifying what he calls the parent swings.
Parent swings.
On the chart. So these are significant highs and lows.
Okay.
But not just any fluctuations.
Yeah.
He's looking for decisive shifts in momentum.
Okay.
It's if you think about a story,
yeah,
right?
Okay.
You have your major plot points. He's not looking at every little, twist and turn.
Right.
He wants those big moments where the buyers or sellers really took control.
Okay. So it's those pivotal moments.
Exactly.
Okay.
And once he has those marked, he uses the Fibonacci extensions to kind of project potential price levels above those highs.
Okay.
Because we're talking about a bullish market.
Right.
So he's like, all right, if the market is truly bullish,
Yeah.
how far could this upward momentum really take us?
Got it. So those projected levels, those become his, like, his target zones?
Yeah, you could say that.
Okay.
But he's not just going to blindly buy when it hits those levels.
Right. Of course not. So
Eh,
how does he know? How does he know that it's the real deal?
So he looks for confirmation, and this is where his focus on those candlestick patterns comes in.
Okay.
He uses those to kind of see, like, okay, what's the balance of power between the buyers and sellers at those Fibonacci levels?
So can you give me an example? Like what would that look like?
Yeah, so let's say the price is approaching a key Fibonacci extension level,
Okay.
and he spots a bullish engulfing candlestick pattern.
Okay.
So that suggests that, the buyers have really absorbed that selling pressure and they're pushing the price upward.
Okay.
That's a strong confirmation for him.
So it's almost like, those Fibonacci levels are his fishing spots.
I like that.
And the candlestick patterns tell him if the fish are biting.
Yeah.
I love it. Okay. So now let's flip the script.
Okay.
Let's say we're in a bearish market.
Okay.
We're feeling a little bit more, cautious,
Right.
expecting prices to potentially head down.
Yeah.
Does he still use the same kind of Fibonacci approach?
He does, yeah.
Ugh.
It's just that now we're kind of looking at the opposite, right?
Right.
So instead of projecting those Fibonacci levels above those previous highs,
Yeah.
he's extending them below those significant lows.
So it's like he's using the same map,
Yeah,
but he's flipped it upside down
Exactly.
to navigate a different terrain.
precisely. Yeah. And then, of course, he's not looking for those bullish candlestick patterns anymore. He wants those bearish signals that kind of confirm, okay, this downward move could really be happening.
Interesting. So no matter which way the market's going, he's got like a Fibonacci tool to guide him.
Yeah.
I like it. But here's something I've always wondered about this whole Fibonacci thing. Like, how do you actually measure those extensions?
Right.
Because it seems like there's some wiggle room there,
There is, and this is where his approach is, it's very meticulous. He really stresses.
Okay.
Like, you have to use the bodies of the candlesticks,
Okay.
not just the wicks.
The bodies, not the wicks. Now, why is that?
So for him, the candlestick bodies,
Mm-hmm.
those represent the opening and closing prices, right? That, for him, shows the real sentiment of the market.
Okay.
The wicks, those can be all over the place, right?
Right.
That could be just like short-term volatility, maybe some manipulation.
Okay, got it.
But the body of the candle, that's where the majority of the traders were actually placing their bets.
It's like the difference between like listening to a signal,
Yeah,
versus a faint little whisper.
exactly.
Okay.
And, by being consistent with his measurements,
Yeah.
he's making sure, like, okay, if I'm analyzing a chart
Right.
and you're analyzing a chart, we're both seeing the same thing.
It's standardized.
Exactly.
Okay, I like that. So I've heard him use this phrase before. Equal lows.
Yes,
And it's like the market is drawn to these specific price points.
it's true.
Tell me more about that. How does he kind of interpret that? Tell me more about that. How does he kind of interpret that?
So it's like, imagine the market kind of like leaving footprints.
Right.
And those footprints are the price levels that it's like tested before.
Right.
And equal lows are these points where the price has like dipped down, tested it, and bounced back up in the past.
Okay.
Like a resistance level, but in reverse.
Oh, okay. So the price kind of dips down, hits that familiar level, and it's like, whoops, been here before, time to turn around.
Exactly. Like it's had that experience before. And it's like, nope, not going there again.
Right, right.
He really sees those equal lows as like potential springboards for upward moves,
Okay.
especially when those line up with his Fibonacci extensions.
So it's like those two things are like high-fiving each other?
Totally. It's like the market is giving him a double confirmation. Like,
Yeah.
hey, this level is important. Pay attention.
This is it. This is the moment.
Exactly.
Got it.
Yeah.
But, even with all these tools, all these confirmations,
Right.
trading still has risk.
Oh, absolutely.
So it's not enough to just like know where to enter, right?
Yeah.
You need an exit strategy too.
Got to know when to fold them.
Exactly. So how does he manage those trades? How does he manage that risk?
Well, he's all about like discipline,
Okay.
having a plan. And he really recommends like write down your profit target and your stop loss level
Okay.
before you even like think about clicking buy or sell.
So before you even enter the trade.
Before you enter the trade,
Mm.
he compares it to like a prenuptial agreement with the market.
Oh, I like that.
Right. You're agreeing on the terms up front.
Right.
So you're not like making emotional decisions later on.
It takes the emotion out of it. I love it. Okay, so how does he determine those levels? It's got to be more than just picking a random number.
Oh, yeah. It all comes back to those Fibonacci levels and equal lows.
Okay.
He'll often set, like, his profit target near a higher Fibonacci extension.
Okay.
Or maybe a previous, like, significant high.
Yeah.
Because he's anticipating, like, okay, the market might retrace back to that level.
Yeah.
And then his stop loss.
Yeah.
Usually just below a recent low or, some key support level.
So he's basically saying, if the market doesn't behave as I expect and it breaks below the support,
Yeah.
I'm cutting my losses and moving on.
I'm out of there.
I'm out.
Yeah. It's about protecting your capital.
Right.
He'd rather take a small loss and, live to trade another day than, like, stubbornly hold on and risk a much bigger loss.
Don't fall in love with the trade, right?
Oh, exactly.
Yeah.
He's got this saying, trade what you see, not what you feel.
Ooh, I like that.
Because at the end of the day, the market does not care about your emotions.
He really doesn't.
It's all about reacting to that price action, managing your risk.
This has been a really interesting deep dive. It's like we're learning a new language.
It is.
The language of Fibonacci, equal lows, candlestick patterns.
Yeah, a whole world.
But what I'm really getting from this trader is that he's not just like throwing darts at a board,
Yeah.
There's a method. There's a method to his madness.
He's got a system.
He's got a system, exactly. And that's a good takeaway for everybody. Absolutely.
Trading successfully isn't about, looking into a crystal ball.
No.
It's about probabilities, managing risk, and really just having the discipline to stick to your plan.
Having a plan and following it. Couldn't agree more.
Well, this has been great. The inner circle trader, he's definitely given us a lot to think about. But, remember,
Yes.
this is just one trader's perspective.
Right.
Don't just take his word for it. Do your own research.
Exactly.
Check out other target selection methods, profit objective methods.
There are a lot of different approaches out there.
Figure out what works for you, your trading style, how much risk you're comfortable with.
What's your risk tolerance?
Exactly.
Yeah. So as we wrap up today, just remember, knowledge is power, especially in the world of trading. So keep learning, keep exploring, and we'll catch you next time on The Deep Dive.